Bitcoin has just cratered in one of the most dramatic sell-offs the crypto market has seen in years, erasing trillions in value and shaking confidence from Wall Street to Main Street. Once seen as an unstoppable store of value, Bitcoin is now forcing investors to question whether the digital asset revolution was built on solid ground. The crash has become the defining story of today's crypto market. After peaking in October 2025, Bitcoin has fallen sharply and is now trading in the low $60,000 range. This marks its lowest level in over a year and places it far below the highs fueled by pro-crypto optimism. The decline reflects deep instability across the entire cryptocurrency ecosystem. This sell-off did not happen overnight, and its roots run deep. A mix of tightening regulation, geopolitical tension, and shifting investor psychology has drained risk appetite from the market. Institutional inflows have slowed as uncertainty spreads across global finance. Bitcoin has now retraced roughly half of the gains it built throughout late 2024 and 2025. What was once labeled digital gold is being tested as a hedge against inflation. Investors are questioning whether speculation alone can continue to support such volatility. In the United States, political controversy has added fuel to the downturn. A Trump-linked crypto venture, World Liberty Financial, has become the center of ethical and legal scrutiny. The case shows how closely crypto and political power can collide. Just days before Donald Trump's second inauguration, World Liberty Financial sold 49% of its company. The deal, valued at roughly $500 million, involved investment interests tied to a powerful UAE royal. The timing immediately raised alarms in Washington. Lawmakers argue the transaction may represent a conflict of interest and a national security concern. Some critics say it could even violate constitutional limits on foreign influence. The controversy has shaken trust in politically connected crypto ventures. Representative Ro Khanna has launched a formal congressional investigation into the deal. Lawmakers are demanding documents and explanations surrounding the transaction and its timing. The probe highlights growing fear over private money influencing public policy. Concerns intensified after reports showed the Trump family's crypto projects actively adjusting their holdings. World Liberty Financial recently sold over 70 wrapped Bitcoin during the market downturn. The move generated millions and raised questions about insider strategy. Another Trump-linked firm, American Bitcoin, has also drawn attention. The company holds nearly 6,000 Bitcoin, ranking it among the largest corporate holders. Yet even massive accumulation has not protected it from falling prices. The contrast between large holdings and declining value paints a cautionary picture. Institutional backing alone has failed to shield investors from volatility. Confidence is proving just as fragile as price. Outside the United States, regulators are sending a clear warning. In Australia, authorities crack down on unlicensed crypto operations. Compliance is no longer optional. BPS Financial was fined nearly $10 million for operating without a license. The firm was also accused of misleading investors about its digital token. Courts imposed a long-term ban on its financial activities. These actions signal a global shift toward stricter oversight. Transparency and investor protection are becoming non-negotiable. Crypto firms are being forced to mature or exit. At the same time, crypto-related scams are surging worldwide. In Queensland, more than 300 people lost around $18.5 million in just a few months. Many victims were targeted through crypto ATM schemes. Scammers often impersonated law enforcement officials. Victims, especially older adults, were pressured into depositing funds quickly. Once transferred, the money was nearly impossible to recover. Authorities believe reported losses are only a fraction of the real damage. Many victims never come forward due to fear or embarrassment. Crypto ATMs have become a major tool for criminal activity. Despite the chaos, traditional finance is not abandoning crypto entirely. Major banks now openly acknowledge that digital assets and blockchain are here to stay. Some institutions are integrating crypto into their existing systems. Plans to use Bitcoin and Ethereum as loan collateral signal a major shift. Legacy finance and decentralized assets are slowly converging. Even skeptics admit crypto cannot be ignored. This moment defines a turning point for the industry. Price crashes, political scandals, regulation, and scams are all colliding at once. The market is being stress-tested like never before. Supporters argue this turmoil is part of crypto's maturation. They believe weak players will be eliminated and stronger systems will remain. Skeptics warn the damage to trust may last for years. Today's crypto story is no longer just about charts and hype. It is about law, politics, regulation, and consumer protection. The future of digital assets now depends on whether trust can be rebuilt. As the market faces its toughest test in years, the world is watching closely. Stability, accountability, and real reform will determine what survives. Crypto's next chapter is being written right now.